Good morning, traders. This is Brad Matheny. Today's the 21st of January, Sunday. This is the MENT.com Expert Growth Gold and Metals video. First things first, the strength of the U.S. dollar recently holding up above 103 and continuing to strengthen is driving foreign assets into U.S. dollar-based assets in the stock market, primarily technology. Technology's been on a roar, tearing to new highs, particularly over the last 3-4 months. But what we're looking at right now is a moderately strong gold price holding up. Remember, this is a weekly chart, and you can see the rally in gold here through the end of the year, October, November, December. This is when the U.S. stock market was rallying. And now we're seeing this stalling, flattening formation that almost lines up as a flagging formation. You could almost see the flag right here, setting up right across possibly these levels, setting up a flag. Now, given where we're at with gold and with the U.S. dollar, I would urge you to consider gold the proper safe haven for your investments. Gold is about ready to make a very big move to the upside. I suggest it'll happen by April, May, maybe a little sooner. But again, gold is attempting to move up into this breakaway phase. We came very close to moving up into the breakaway phase last week. Actually, this month, we got up into it. Let me look what I'm doing here, bring the front. We got up into the breakaway phase right over here, early stage. But in my opinion, gold's got a roughly an 18%, almost 20% rally phase setting up right now. And that will likely come on the breakdown of the dollar a bit, maybe down to 101, maybe 102, 102 and a half. But again, we're looking at a catalyst type of a move in gold. I think it's going to make a move here by April, May. And I think that the next big move for us, ladies and gentlemen, is going to be a 20 to 25% upward move in gold, targeting 24 to 2,500. Now, ultimately, ladies and gentlemen, it's going to take kind of a shifting in the sands. We're going to have to move away from this almost dot-com bubble type scenario with the NASDAQ and technology. We're going to have to move into a reversion of values related to technology and earnings and forward growth expectations. Everything has got a lot speculative over the last year or so. We've seen quite a bit of big rally phases where the economy is tightening, consumers are tightening, the Fed is tightening, and what's happening here is we're chasing the strongest of the market, which is right now basically technology and blue chips. You're seeing that blue chips, large caps, are actually doing quite well, holding up very nicely and still producing dividends. But again, long and short of it, ladies and gentlemen, when that shifts, which I believe will be this year, this is going to be a very ugly, dirty kind of an election cycle. I mean, obviously, the primaries next week in New Hampshire and the primaries in Iowa are set to pretty much level the playing field, and then we're going to get into 6-7 months of really hard-slinging political turmoil, in my opinion. So I think we're going to be seeing a big rotation in the markets, and I urge you to stay very cautious right now. Gold, in my opinion, is holding up very well. Yeah, we could see a pullback maybe back into the 1930, 1940, 1950 area, this area that I've highlighted right here. See if I can drag this out. But that would be basically a pullback low, which would cause a big rally, in my opinion, because the next phase here is going to be for the markets to roll downward, the major U.S. and major indexes, global indexes, to roll downward off of capitulation, slower economy. The U.S. dollar may move from the 103 area to the 102, maybe 102 and a quarter, maybe a bit below 102, and that's going to send gold skyrocketing probably 16 to 22% up into this 2,400, 2,400 to 2,500 area. Okay, let's take a look at the data. Right now, it's just gold and silver are just stalling in a pre-accumulation phase. Okay, so here's where we're at. Gold, this is a monthly gold cycle chart. We are seeing some accumulation. We are stalling out. Very good time to look to position again or reposition into gold. We're not done with this move. We're going to have a very big move to the upside. And I think it's going to start to move probably by April, May, again, very strongly to the upside. But again, early stage accumulation here, not seeing a bunch of accumulation yet. Still basing, bottoming back in this area. We're off of these lows, which is great. The next move would probably be to drift higher, maybe get above this 45 level, the red level, and then stall and then move into this big accumulation phase. The market rotation index, which is related to the U.S. stock market, is moving downward after the big November, December rally. Remember, I warned about this, suggesting we're likely going to come back down into this area, trying to find support. This is a very early stalling pattern. Understand that this is basically measuring underlying momentum in the market. So even though the NASDAQ and the SPY reached new all-time highs last week, this market rotation index is actually moving downward, showing that fundamentally the U.S. stock market and global markets are weakening. Custom fear index is at 5.83, rising slightly. We're about ready to move back up above 6, which will put us back in the early fear stage, what I call, let's say, level 1. And this is, again, moving us into a very bullish bull trap scenario on the SPY. And you can see the sentiment index rallied up last week on the big move in technology. I think this earnings that we're getting into, which is going to be the next 3 or 4 weeks, are going to really shake up the market. So be aware that we could see some very big volatility over the next 3 or 4 weeks. The gold trend index is holding up quite strongly, even though gold is down. This is a monthly chart. You can see here we're up near all-time highs. We're holding up very well. Even if we got a little bit of a blip back down into this area, still be very strong overall. You can see this big rally phase from 2019 all the way up. My expectations is we're going to rally into the breakaway phase is the next big move. Probably about 60, 70 days away back into April, May to see the big rally. But it's coming. I wish I could time it better, but it's coming. And I'll try to do more on the timing side as we go forward. Standard deviation metals chart consolidating a bit. This is representing a bit of a flagging formation, a little bit of a drop, could be a false bottom setting up. This is the metals index monthly chart holding up very, very well. And again, I think if we do get a drop, it's going to be a stall. It's going to basically be like this kind of a move. Stalling out, pop, stalling out, pop, stalling out, pop. So we'll see how it moves going into February here. But I'm looking for a move basically up above 2,200. We can get above 2,200. The market's really going to start to pay attention to gold again. Metals valuation cycle chart reaching the apex, flagging out. This can happen. This is essentially a false bottom or a false breakout that can happen near these apexes. You can get a bit of a move to the downside, flushing out some of the longs, then it'll just revert right back up to the upside. Again, this is the monthly chart, so be aware. We could see a very big rotation in February, March, April to the upside for gold. In fact, I believe it is coming. I believe it's just a matter of flushing out this consolidation apex, and then we're going to start to see a big move higher. Metals valuation index, very similar to the standard deviation index, flagging a bit downward. Again, we're running right across this Fibonacci price amplitude arc. Very likely that we're going to stall back out, see some support, and move a bit higher. Gold cycle patterns are for the week. Rally, rally, nothing day, crush, which could be a very big day, gap potential, then we get a temporary bottom, a nothing bar, a top, and then a reversal rally. So If these patterns are accurate, we will get rally, rally, possible carry through on the 24th. Then the crush pattern. Crush patterns can be either very big downward days or upward days. These are very, very similar to breakaway patterns or breakdown patterns. Breakaway patterns can be huge. They can be, you know, 1.5, 2x the standard range for price. Then we get this crush pattern here again, could be huge. Then we get a gap potential, which could carry us further. Temporary bottom here indicates that we move downward, trying to find support, and then roll off of that support and move higher. We get a flat day here, which could see a continued upward move. Then a topping pattern means we move higher, try to find a resistance level, then roll downward off of that resistance level. So this should end in a downward trend on the 31st. Then we end up on February 1st, we end up looking at a reversal rally, which again, reversal top formation means we roll upward, find a peak, roll down. Then on the 1st, we get a reversal rally, which would roll back to the upside and try to threaten that top resistance area. So be aware, we're looking at a very strong next couple of weeks for gold. Let's see how it plays out. By February, see, Monday, Tuesday, Wednesday, Thursday. So by the 2nd of February, my estimate is that we are going to be, here's gold. We are at 2029 right now. I would estimate that we are going to be above 2110 probably based on the cycle patterns. It's going to rally considerably, in my opinion, over the next 2 weeks. Custom metals index rolling back downward again. I tried to draw the flag earlier. You can see the flagging formation right here, coming right across these lows, coming right across these highs. We're apexing already. You can see we've got an A, B, C, D, E breakout potentially to the upside. I would urge traders to be prepared for a big move in gold over the next couple of weeks. And again, that's it right now. Let's take a look at silver while we have some time. And silver, even though I have a bunch of lines in here, let me get rid of some of these. Okay, let's see where we're at here. Silver is moving, should be moving up into this breakaway phase. We're stalling out quite a bit. Now remember, the move here to the breakaway phase was prefaced on the fact that we ended the setup phase over here and we saw the appreciation up into this breakaway phase. This move up into the breakaway phase could take place, you know, sometime over here or out over here or right away. And again, timing this is difficult, but we are consolidating into a very tight support channel here, very solidly above this channel, this blue channel here. Let me shrink this a little bit. Yeah, there we go. As long as we're staying above this blue channel here, we're looking very solid. And silver right now at 2270 would likely be attempting to move above this area, assuming gold moves. So again, if the next week, this is a weekly chart, if we start to see a big move in gold, silver will lag, okay, by probably 3 to 5 weeks, maybe a bit longer, but it would take a pretty solid move in gold up above 2200 to get silver to try to move up above this 28, 29 area again, in my opinion. But that would happen on the way up to the new breakaway phase. And that would move us potentially up into 36, 37, 38, 40, maybe even 42, 43 on a peak. So be aware, we're looking very solid. We are reaching this apex pattern. So let me come in here to the monthly and understand that we are reaching this A, B, C, likely D right down over here, maybe back here, and getting into this apex pattern with a big move to the upside. The breakaway pattern could last quite a while going forward, but again, ladies and gentlemen, we are looking very solid for gold and silver right now. Okay, that's it. Talk to you later.